Hey, what's going on, guys? Hope you guys are doing well. Hope you guys aren't checking your portfolio too much because there has been a lot of volatility in the market. A lot of news around tariffs coming out. Just a lot of uncertainty, with the Canada tariffs, with the Mexico tariffs, and so forth. The market is not reacting, too well to all the news. But needless to say, hope you're managing your portfolios, and if you are using margin, prayers for you, man. Hopefully you're not getting margin called or so forth there. But today I want to look at some of the YieldMax funds, some updates from some of their new funds that just came out, and kind of go over the data I have in the spreadsheet to look to see just kind of an update of which ones are upholding this pullback a little bit better than others. So starting today officially, the YieldMax Russell 2000 0 DT covered call ETF is now available. Go check that out. RDTY. I think that'll be an interesting one as well. They're seeking weekly income and capped exposure to the Russell 2000 index. That index was supposed to do pretty well this year. A lot of experts thought, but we'll see how that one shakes out. This is something also that I saw recently come out. Starting on 3/12, ULTY is going to be paying weekly distributions. So ULTY is another one of their funds that's pretty unique. It's been beat up quite a lot. I think year to date it was leading the way for some of their group funds earlier on, but I've not checked it since the recent pullback. But yeah, ULTY is now going to start to pay weekly. Hopefully that helps that fund out. I don't know, get some more assets or managers so they can do better. Shout out to all the ULTY shareholders out there. Hopefully you guys are navigating what's been going on recently with that. So going down, I wanted to look at this article, right? So I wanted to update the spreadsheet with the data for these groups that came out. The ones that I've been tracking CONY, maybe ABNY. I don't think I've been actively tracking ULTY. I have been tracking NFLY, PayPal, and so forth there. So I'm going to update the spreadsheet real quick with this data. Bear with me here. I'm not going to make you guys watch me go through all of this. So I'm going to update this data and then come back once I have updated it. Okay, guys, back here with you now. Jumping into the spreadsheet, let's go ahead and take a look at some of the numbers. So the ones that we're specifically tracking or taking a look at this week are the Group C funds. So these are some of the numbers for those funds. So we can see here, you guys can't quite see, but yeah, these are the Group C funds over there. But in particularly, so look in the list, we got NFLY, right? Total return coming in for the year at 1.02%. The next one on the list is MSFO, down negative 5.14%. ABNY down 0.16%. PayPal or PYPY down 17.78%. CONY down 11.84%, and AMDY down 13.81%. So, needless to say, these funds are struggling, right? As of most of the market is struggling right now. Hopefully things kind of turn around, and this isn't just the beginning of like another 2022 or something, or 2020 or something like that. We'll see though. Definitely a lot of uncertainty in the market. As far as the yields go for these distributions, according to their website, so NFLY typically pays a yield roughly, distribution of 76.51%. Looking at this article, they're projecting this past month, this distribution rate was at a 29.38%. So I don't know if they held some back this go round, but that is significantly less than the 76% there. MSFO is pretty close to of what they typically have been paying. Looks like A, B, and Y is an increase of what they've typically been paying. PayPal has not, definitely not paying out what it typically does. Same with CONY. Well, CONY is just 127 is pretty massive. That's probably not a good data set there, but almost 80%. And then AMDY coming in at 25.33%. So I know these are not all of the Group C funds. These are just the ones that kind of, spark some interest to me. I know ULTY is another one on there that's kind of interesting. The weekly pairs are pretty interesting as well. I just haven't been tracking those because the duration doesn't really matter a whole much to me right now. I don't really care if I'm getting paid weekly or monthly. I just kind of want the best overall performing fund to be invested into. So just some thoughts there. I'm kind of interested. I don't know if they just lost out on their trades this go round or what exactly is happening, because these distributions are definitely for NFLY and the PayPal one and the CONY one are all under, and really the AMDY one are all under their typical distribution yield. So not really sure. It could just be the market volatility going on right now. The VIX is increasing. So you'd think they would be able to harvest more premium, but if the underlying call option that they're purchasing is dropping, it could be kind of offsetting that there. So a lot of things that are kind of happening in the market right now that could be affecting some of these distributions. Just kind of keep that in mind too. Like what you're investing into is going to these options premiums can vary, quite a lot month after month. Dart Dividend says those numbers are dropping. TSPY, look at this advertisement. Looks like this is another covered call fund, closer to 14% yield. Solid week and a market. Yep, for sure. Yeah, ULTY. Yeah, so I think a lot of people are going to like that. We'll see. For those unhappy with CONY, ask yourself if you'd rather have the share price drop even more or not. For the broad market bearish downturn, it's pretty good. Pray for printer and you'll forget about NAV erosion of almost all the funds in no time. It's the macro. Yeah. YieldMax, 25 cents. Some people are happy about that. NFLY is just awful. 60% lower than the February distribution. Yeah, so something happened with their NFLY distributions. This guy's not happy with CONY. Happy investor, CONY. That guy's not happy. So that's going to be it for today's video, guys. Just kind of wanted to bring some updates, some light, some updates from YieldMax. Obviously ULTY's now becoming a weekly payer. They had this new fund RDTY that just began trading today. It was probably a rough day for its first day to get introduced to the market. But yeah, they definitely are getting a lot of weekly paying funds at this point, right? YMAG, QDTY, STTY, YMAX, GPTY, LFGY, and now ULTY. What is that going to be? It's going to be 1, 2, 3, 4, 5, 6, 7 weekly payers that they're going to be up to. So pretty massive there. We'll see how that kind of shakes out. That's kind of what I feel like the retail world wants. It's kind of been preaching, weekly income. It's people want their distribution sooner to get the compounding going quicker. Do with that as you will. I don't know if it makes a big difference in the long term, whether you're getting weekly or monthly distributions. Typically I would think the more distributions a fund has to make means that the fees would be higher compared to monthly or less frequently distributions, but it does not seem to be that case for YieldMax. Their funds are their expenses are still really high, and I think that's something that they need to fix for sure. You know, you look at JetQ and JetB, they're only at 35 basis points, and YieldMax is 3x as expensive as them because they're almost 1%, which I understand, right? Like they're doing a lot of work with these option contracts and whatnot, but whenever you scale your portfolio and you have a lot of money, the difference in that expense ratio can be pretty massive, needless to say. But yeah, guys, that's gonna be it for an update from the YieldMax ETFs. If you're an investor in any of these funds, definitely let me know your thoughts down below, and like and subscribe. Stay tuned for more content coming up. Cheers.